We have been talking about crypto clarity for quite some time now on the channel. I would argue it's probably over a year now that we have been putting a spotlight on crypto clarity becoming a reality under this admin. However, we have been talking about the big moment for crypto for well over now 5 years, because again, clarity and regulations for crypto is such a massive moment for this entire market. Now today, we officially got the green light. We officially got the announcement that the deal is done, and we have to talk about this. We have to address this because, again, this has been a problem ongoing for months now, while this bill has been basically halted. I have been putting a spotlight on the fact that it's the bankers that are causing all of this nonsense around this bill, but it seems as though we are finally seeing this all resolve. Now, crypto has been doing very well over the last couple weeks, and what's interesting about this is like Bitcoin is still above 70K. XRP is still above A140. The market cap for crypto is still hovering around like 2.4 trillion. And this is happening while stocks are slowly but surely having a very rough time. And a lot of people are now calling for a stock bear market. Not too sure if that's the case right now. Obviously, I do think that stocks are just weathering the storm with the Iran war as well as, a few other, things happening around, like, for example, inflation starting to become a reality again, oil still trading at significant highs. There's a lot of issues with stocks right now. But crypto seems to be just ignoring all of those issues, while we see, most of the markets still picking up and having a good time. XRP recently did have a slight sell-off. We talked about it a little bit. This is exactly what we kind of wanted out of XRP. Anyways, the question is, though, do we go lower here for XRP? And ultimately, I think that the main thing that we are looking at is just a daily candle close, below, like 140 thras to confirm that, or not. But XRP looks pretty good. Looks like a cup and handle, forming on the chart as well. And typically this leads to significant higher price action. The next key level here that I'm really looking at after, of course, we get a daily candle close over 162 hours, is all the way up here around like $180. So, again, I do think that XRP is going to go on a pretty big run here. And, that would happen most likely going into next week. But beyond that, looking into, a few things around the market. Yeah, we have some exciting stuff to talk about today. I do want to quickly just go over something real quick. So it seems as though YouTube thinks that my channel is AI. Which I think is funny because, again, I've been uploading on this channel now for well over 5 years. Before, like, we had access to AI tools and things like that. I do not use AI for anything. I do use AI sometimes for, like, my thumbnails just to kind of improve them. I think it's crazy that AI is now flagging my channel as, AI. Back in October, the channel got hit with a strike, and since then the channel has struggled to get ranked on YouTube. Feels like, I am still shadow banned. Still feels like this channel is not getting recommended at all, and, I'm not too sure why. But, if anything, I want you guys to understand that I do have a second channel, that I will most likely be starting to utilize if this does not improve because I just think that this is crazy. But of course, YouTube is no help. But I just wanted to let you guys know that if you don't see any more videos on this channel, I most likely moved over to that second channel. But I'll try to, do something with this channel, after a little bit of a break. But it's just kind of ridiculous that I have to bring this up. And I just want to let you guys know that, if you're not getting recommended any content, this is probably why. But beyond that, let's actually dive on into a few things. Number 1, let's talk about what Evernorth recently posted, which was, of course, the fact that read this before you react to the Fed today. Now, they posted this on the Fed rate cut day, which was Wednesday, and we have here that XRP surpassed 7.7 million non-MPY wallets for the first time in its 13-year history, with active addresses hitting a 5-week peak of 46,767 on March 16th, Tokenized commodities on XRP have grown from 111 million to 1.14 billion in 2026. Think about how crazy that is. 111 million to 1.14 billion, giving XRP over 15% of global tokenized commodities. Daily transactions on the XRP ledger surged to nearly 3 million in the last week, with AMM pools increasing to 27,000. Those metrics are the same at 3.5 or 3.75%. And yeah, listen, XRP has been doing tremendously well. I feel like this market has been decoupling away from stocks. I know that that's crazy to say right now. However, if you actually look at things, it does feel as though we are decoupling away from almost every single other market. Gold is down, silver is down, stocks are down, and pretty much the only market that's up right now is crypto. So, what could you say you know about that? It has to be the fact that this market is starting to decouple. Now beyond this, let's go over here to this image. So we recently got a breakdown of all of the Wall Street firms that are holding XRP. Guys, Goldman Sachs holds 80, almost 4 million XRP. Citadel's on here. Jane Street's on here. DRW Securities is on here, guys. We talked about this. Wall Street is prepared for this big moment for XRP, and we just got the deal signed in. We just got the deal confirmed. What am I talking about? Well, we're going to get there. But we do have over here from the Paul Barron podcast, Wall Street Knows What's Up. Riz XRP posted this. Check this out. Because again, these are individuals around EZE. They know what's happening around XRP. Paul Bear knows what's happening around XRP. Yes, Wall Street is ready. Check this out. Wall Street comes in on the XRP ETFs. You have Goldman Sachs, of course, showing up. And this was an interesting news item. I'll bring it up real quick. Wall Street enters the XRP ETF inflows hitting 1.4 bill. Goldman Sachs becomes the top holder on XRP ETFs. You look at this and you just wonder what else is being not told to us when it comes to these ETFs. Are we going to see more activity coming in from the institutions on this? What do you guys think? Definitely. I mean, I put a post out actually about this around about a year ago now, with respect to BlackRock's ETFs, XRP ETFs as well. I think ultimately when you look at these different institutions, they want to go where they can actually find the most money. I mean, financial services companies, their number one goal is ultimately to make money. And when you have an asset like XRP, which has so much liquidity, so many different holders, it's, number 3 biggest crypto in the world after Bitcoin and Ethereum, and in my view will actually be bigger than Ethereum in the not too distant future. And ultimately, I think, that's why they're so attracted to XRP. And, as well, when you look at retail audience, XRP has a massive, massive holder base. If you look at something like Bitcoin, a lot of the Bitcoin is really held by number 1, a very small fraction of people in terms of, you look at the whales and all of those people. And when new people come into crypto, Bitcoin isn't necessarily the first one they want to dip their toes in with. XRP is a really uniquely positioned asset. Obviously, ultimately, we do so much work on the XRP ledger and together with teams building on the XRP ledger because we're so bullish on it. But, yeah, ultimately, all of these institutions you're seeing here, they want to get a piece of XRP. I'm looking at the 500,000 XRP holding and above. And I'll just throw in a few names in there. You got Jane Street in here, DRW, Gallagher, Citadel, and then, of course, Millennium, and then Goldman right there at the top. So, pretty interesting. The biggest, the best hedge funds in the world, right? Yeah, exactly. Yeah, this is a lineup of they know what's up. Yeah, they are correct, like they know exactly what's going on here, right? Deals being made. What exactly is that? Well, we have over here just in the White House and senators have reached a tentative agreement to resolve the stablecoin yield debate that has stalled crypto legislation. And yes, we do have the announcement from CNBC earlier today. Breaking, CNBC just announced a compromise between banks and the crypto companies could be announced today to finally pass the crypto market structure bill. Trillions are waiting to flow once this bill is signed into law. Check it out, bill. We still don't have real clarity on, whether crypto firms can effectively offer either, effectively the equivalent of interest or loyalty points or other kinds of things like that. I'm hearing that there's a compromise in the works in the Senate Banking Committee, and I'm hearing that that compromise is going to be announced as early as today. I'm cautiously optimistic. Obviously, we don't know for sure if that will happen. To me, the bigger question is not whether a compromise will be reached between the financial institutions, the banks, and the companies like Coinbase over rewards, and that is, for your viewers, by the way. Whether or not, essentially, some form of yield can be paid, Bill, we still don't, we do have the announcements regarding this. They did reach a tentative crypto regulatory agreement. Ultimately, the main thing that we are looking at here is that this is clearing the way for the bill to get signed into law, but it's still going to take a little bit of time. It's not going to happen overnight. This deal signals major progress towards an April vote on the crypto market structure bill. So, we still need to get through the voting side of the bill. But this is showing us that clear progress is being made. We're starting to see, some sort of agreement, some sort of deal being made here, and that's exactly what we want to see with this. Obviously, yes, we still have a lot more progress to, make, but this is a very good sign of what's to come. At the end of the day, everyone is watching this, though. We even have over here from Vlad Tenev again, CEO and co-founder of Robinhood. We must unleash the yield safely. We are at a momentous turning point for our industry. If Congress passes the Clarity Act, we finally get the regulatory certainty that we've been advocating for. So, what's the holdup? Deciding if customers should earn yield from their stable coin holdings. To get this right, we must prioritize what matters for most Americans: value and safety. Tokenization is driving the convergence of trading and crypto with stable coins as a clear front runner. But the current environment makes holding stable coins structurally disadvantageous. With rates at 3.5%, a $10,000 savings balance earns about $350 a year, a stablecoin balance zero. Consumers are rational. They want yield as their balances grow. Today, they are forced into unnecessary conversions or high-fee wrappers just to earn a return. This adds friction, counterparty risk, and opacity to a technology meant to solve those exact problems. The pushback from legacy institutions has been predictable, and it definitely has been. They lobby to treat stable coins strictly as payment rails rather than value-holding assets by stripping yield. They aim to make stable coins less attractive than traditional bank deposits. Why force consumers through these hoops? We have the tech to rebate yield automatically beyond punishing the consumer. The bankled anti-yield position is counterproductive for 3 reasons. Number 1, alternatives already exist today. Money market funds hit an all-time high of $8 trillion in December of 2025. Tokenized money market funds are already providing the mass market yield that legacy banks are trying to gatekeep. Money stays in the system. The lion's share of the reserves held by regulated stablecoin issuers are in traditional banks and custodians. The exit bank's fear is an illusion. These dollars never actually leave the financial plumbing. Stablecoins aren't bank accounts. Concerns about deposit flight overestimate the average consumer's desire to swap FDIC insurance for incremental yield. If yield were the only factor, these deposits would have migrated to money market funds years ago. And you know what's funny about this? I just stated this in a recent video talking about why are we having this argument back and forth regarding stable coin yield? Why are the banks so terrified of this? Because again, you do have all of these other alternatives. Yeah, you could throw money into money market funds. It's easy, simple, and yes, you do also get significant high yield. There's no actual, issue here for banks. I don't know why the banks are so terrified of this. You still have the money sitting in the system. You don't have bank accounts tied back to stable coins, and there's already alternative markets that have massive amounts of money in them. So the question here is, why are banks trying to stall this? Why do we have such a big stall on this? It makes no sense. Which is why we need to get this done as soon as possible. We need to get a deal made, which we do have an agreement. Now, we need to watch for April. April is the focus to actually get this voted on. And, of course, on the president's desk to get signed into law. And it just seems as though we're starting to make a lot of progress on this. And, of course, yes, over here on a Polymarket we do have the odds surging to 69%. It was a 6% spike. After today we got the big update regarding this. Again, is this going to really lead to this getting signed into law? Well, April is going to be the main focus. We still have the voting progress, which, again, that could take some time. But I'm hopeful that we can get clarity by the beginning of summer. I think that will be huge for the markets. I think that's going to be a massive unlock for the entire industry. And it's definitely going to be very exciting for XRP because, again, you already know that Wall Street is lining up here like the reason why Wall Street is behind XRP in this, big of a way is because they understand that XRP is one of those large utility assets that will benefit the most from clarity. So, with that being said, I hope that you guys enjoy this video. If you guys did, definitely leave a like, subscribe, notifications on 'cause more free content. You guys more follow me on Twitter and join the free Discord below. And with that being said, guys, Nick, thanks for watching. Peace out, guys.